see what's going on in the market this week. Everything is already looking pretty sell-offish already. Um, yeah, so far we're green. It's showing green prices on TradingView, but the sentiment right now for me is a rejection. I already started a little paper trade on ES and RTY going into tomorrow. Just watching the rejection levels. So yeah, we already look like that. We trying to go and retest some lows from last week, but like I said, it's still early in the game, and we'll be able to figure it out from going there. So, um, first things first, everybody that's in the chat, how's your weekend been going so far? Everybody's good, soaking up some rest, getting a little free time, a little mental time away from the market. Getting ready for Monday. That's a bet right there. Okay. Well, first thing that I pulled up was the fear and greed index and what type of data we're gonna have going into a short week this week. So let me make sure that you guys can see the data that I got up right now, and it should be showing the fear and greed index, and this is from CNN.com, of course. But right now, as of right now, we're looking at a really, really extreme fear in the market, from all the sell offs, the crypto sell offs, and all. The market continuously driving, making lower lows. We're in an extreme fear market right now. So, any dips that we could possibly be seeing this upcoming week are probably going to be good dips to buy, at least for a sideways movement until we actually start working our way back up. So keep that in mind. The fear is already set in, and you know what they say when the market's panicking, and that's when you buy. So the fear is already in right now. And then as far as any type of red folder events that we got coming up this week, this is our Forex Factory. Tuesday we got consumer confidence and Joe's job openings. Wednesday we have ADP non-farm employment, and then you got the Fed chairman speaking, ISM manufacturing. All of those are coming back to back Wednesday. Thursday we have average hourly earnings and the non-farm payroll employment change, and also the unemployment rate. So we got two red folder events Wednesday, and then we got three of them Thursday. So definitely keep your eyes out for that. Let that be in the back of your mind, because any catalyst that's gonna affect which way prices are gonna drive this upcoming week are probably gonna be made on those red folder events. So let's go back to the charts. All right, everybody can see the charts. It's back up. All right, cool. Okay, so first thing I have pulled up right now is ES, which is equivalent to the spot right now. So last week we drew out these levels that we have right here, and then we drew off this chop zone as support right here. So as you can see, as of Friday and Thursday, we broke the lows, but prices were getting bought back up, and this is based off the daily time frame. Okay, prices are getting bought back up, and let me hide this for a moment. Prices, prices are getting bought back up. This was the red line that we have here. That was previous months lows, I believe. No, previous week maybe. Yeah. So that's when it broke this previous week's lows and we made a continuation down after that. So since that's an old level that we were watching, that can be used as a lower high, or you can get rid of it altogether and we can focus on just this upcoming week. So here is get my tools up. So here's previous week's lows right here at 73.60 on ES. That's what we'll want to be paying attention to. Are we long in ES now since we are buying the dip? Long? No, not yet. We don't have a reason to. But once I get down breaking this, then this will give a glance on what to look for when I start going long. All right, we're in a pivotal month. Like right now, June was a new month to start one sentiment of a direction, but we're getting ready to end a 3 month candle, which means we're coming to the end of a quarter, getting ready to go into another new quarter. So all these price actions that we're seeing today, prices are pretty much squeezing down to a neutral area. So that way they can get ready to price in next quarter's price action, if that makes sense. So what we'll be looking for or focusing on right now is um, this previous week's new lows down here at 73.60, and then see how we really trade within these ranges. Okay, I opened the paper trade. Let me close that. That way I can get these unnecessary lines out of the way. And sometimes I just set those just to see if certain structure is going to hold up going into the actual trading market hours. All right, so here was our consolidation level. Here's previous week's lows. If we break below here, then we'll be heading to this next support line down here. So it's still a choppy market at this lower range right here. As you can see, we're trying to break back to the upside and attack the previous week's highs. If we are able to break those highs going into tomorrow, then that's a good thing. We probably be able to close green tomorrow. And that'll give us an indication that bulls are slowly starting to step in, but we don't know anything as far as going long, just actually going long right now. All right, because we're still in the transition of making lower lows. When you want to buy the dip, when you can get a good sideways movement, probably from more of like a weekly perspective. Cause see how when we zoom out now, we're looking at a bigger scale of the price action. It's showing us that we're actually ping ponging right now in between, just about four transitional zones. So technically, right now, this would be your resistance, and then down here would be your support. So that's how the market looks actually right now from a broader perspective. We still have a lot of room down here that hasn't really been covered for years. We kind of made this hump and prices drop back down, and next thing you know, we're skyrocketing into the upside. As of right now, it's a whole space in between these lows right here and then these previous highs that haven't really been retested yet. So I wouldn't be surprised if we continue to actually see kind of a ping pong in between these arrows and chop his way down, here, because like I said, it's a big gray zone right now. It retested it. Well, this was actually the second time it retested. Here's the first wick and buy up. Here's the second time we're going into possibly get slowly drop like we've been seeing down into this purple zone right here, and then that'll be where you will actually want to look for a nice, like a true long opportunity. You can start something right here, but it's still a possibility of it dropping if you get what I'm saying from a bigger standpoint. So Like I said, big chop zone. We haven't been making any substantial, trending direction right now, and we just have to still just kind of trade day to day, week to week, until either something drastic happens and the price actually pulls back for nice, just super long opportunities, or if it breaks out, and that'll be our confirmation for the next move up. So that's how we're looking on ES. Um, right now, we're on a weekly chart, and prices are recovering off of those previous week's lows. So it's starting to work its way back up, but we're not bullish, but expect the weekly selling pressure this week. So, be cautious on the longs or the calls when you're in them and they start paying. Be cautious swinging them into the next day, because the bears can actually step in at any given time and push prices back to retest its opening price. So here we are opening right here. As long as we stay above here, bulls are showing us that we're in control. But once prices start dropping, that's when you're going to look for a retest of this previous week's lows, and then possibly a breakdown even further to this whole little area right here, to where prices shot up. It can get just drilled back down into these areas to retest the support zone right here. So NQ is pretty much the same way. If we're looking at it from a bigger perspective, big chop zone, but because it was so heavy in semiconductors early on in the game, it also has a big, just gray area that where prices haven't really just been retested at all. So this is these are the risks right now in the market. Here's our ping pong levels. And if I look at the monthly, you see that we're holding up within there. We're holding up within this previous month's candle. So bulls are still holding prices. We haven't quite broken the lows. Remember, I just showed you guys ES where we took out a previous week's lows, and the selling accelerated going into the end of the week. So right now, bulls are holding. They're stepping in, and prices need to hold above here. Let's make that green. All right, so in order for the bulls to stay in control on NQ, prices are gonna have to stay above this green line. Right now it's just a tug of war, which is why we've been seeing a lot of chopping consolidation. If you're playing calls one day and it don't work out, they normally work out the next day. If you're playing puts, if you would have held it into the next day, you probably would have printed over 100%. That's the game that we playing right now. That's the market that we're having to face at the moment. But like I said, same with ES. We can be expecting some bearish pressure, even if we do decide that we want to go green tomorrow. We're green right now for the weekly and also the daily. But you're just gonna look for prices to really hold on to opening price. Once we start flickering and we get a flat doji on a daily, that's when a lot of indecision is stepping in, and then you're gonna just look for the break of this previous day's lows, which is right there. You'll watch for the break of previous day's lows and the continuation. And that's also previous week's lows. So here's our chop block in between here and here. What we'll be watching for, since we are dealing with a ton of selling pressure, look for a break below previous week's lows, and then probably a sell off even further down into tomorrow or the week if it happens. Okay. I think everything's pretty mixed right now. I got two green arrows and then I got two red arrows. So it's showing that it's extremely choppy. So IWM is one of the ones that's doing a whole lot better. It's been rejecting up here also. Now the thing with IWM, The market's been chopping, but this one's still aiming for making, new highs week to week. Okay, and it has had a nice steadier uptrend. If we go back and look at NQ, it's kind of been in a downtrend. Even ES has been having that same downtrend effect. RTY or IWM has just been having a steady, strong uptrend. So this is probably one of the better indexes that I'm paying attention to. And I talked about it last week. I told them that IWM is very, very nice for growing accounts. It trades, the zero DTEs and one DTEs the same way SPY and Qs do, and it pays pretty good. So if you're one of the ones that just like to play safe indexes, yeah, ES and SPY and Qs are fun, but IWM is the shit. I swear. And you'll wonder why you haven't been trading it. And this is if you don't trade it frequently. So IWM is probably one of the stronger stocks that I'm watching. It's been having green weeks, week over week. And even if we have a dip here, we'll still be heading into a lot of extreme support. Um, and I'm pretty sure some nice moving averages. I didn't even have those up quite yet. But as you can see, even when it dips, it has nice support around these moving averages also. 20, 50, 75, 200. Those are my moving averages. So you see this has nice support, rising support. NQ might be pinching. Yeah, it's pinching between the 20 and the 50. I explained last week that the 50 is my trend detection. So as long as prices and candles are trading above it, we're still in a nice bullish trend. Once we trade below it and we have other rising moving averages, that's more of um, a bigger trend chop and move downwards. And then once we really get below closer to the 200, then that's when we start looking for just severely underpriced stocks if they're a good company. You feel me? So, like I said, we're seeing a pinch between the 20 and the 50 on the Qs, and for the SPY, we're seeing that same pinch between the two moving averages. Okay, so still chop, still some indecision. There's still some bigger macro events that's taking place that has the market in a pinch position too. We're getting ready to head into a new earnings season, so that's always fun. And yeah, it's just a lot of factors that's really playing a part into what we got going on. Bitcoin, Bitcoin's just kind of making lower lows right now. A lot of crash and moving averages, as you can see, is trading below pretty much all of them on the daily frame. The weekly frame is trading below the 200 moving average. So this is actually Bitcoin at an undervalued state, like a true undervalue. If we go back and look at it, we've seen the cycles to where it traded under the 200 moving average on a weekly perspective. As soon as it regained back, this accumulation that it finally saw took place, and it makes the next bull rally. So when you go back and check the historical candles and you start seeing little context clues like this, okay, we traded below the 200 on the weekly. Let's see how long this shit lasted. It started June 13th of 2022. It finally broke out in October of 2023. So I mean, you had to sit on your hands in a larger accumulation level. If we just mark it out just to have a visual, so you sat within this little accumulation level below the 200. You finally see it, reclaim it, and use it as support before the next massive bull run. So if you like crypto, you seen something that's happening right here. All right, here we go. We're trading below the 200. The 200 is gonna eventually work its way over. However long prices decide to trade below it, that just lets you know as an investor, it's trading below the 200 on the weekly. I'm getting in on some nice discounts. Where is it on the monthly? It's retesting the 50. So even though the 50 on the weekly was my trend detection, it's also going to be the trend detection on the monthly chart also. So the fact that the 200 on the weekly and the 50 on the monthly is kind of letting you know a trend and a discount. These aren't really any, you're not going to get in at too many decent opportunities for long-term investments like this. So, last time it did the same thing. It kind of rolled the 50 before it finally made a move up, and here it is starting to hug it again on the monthly chart. So it's already below the 200 on the weekly, and then it's retesting the 50 on the monthly. Nothing about this says that this isn't, this is straight buying opportunities. You feel me? To sit on hands, enjoy the accumulation stage, and then once it's time to make that next rally to the upside, your position is already built. It's already fucking built. So, um, let's get into the watch list stocks. Let's see which ones I like. Let's start off with MSTR since we are already on crypto, fresh into crypto. All right, so I drew this out probably about 2 weeks ago, and we had some retest horizon support right here. So we've already broke below. I said 100, but the 75, and then it's coming down to retest the actual 200, and this was on the 1 month chart, which that's what we on. Um, I did say we closed above 126 on a 3 month time frame. It'll give us slightly a nice bullish close, but we're away from that. It rejected, or it wicked back below the 20 on the 3 month, and now we're trading below that opening price. So unless we can reclaim that actual price right there, we're going into a bearish 3 months, which that's not bad. Okay, that's not bad. But the thing is, though, this just would have gave us an early indication that, all right, bulls are in control. So now the next 3 months, it's still going to be a wait to know whether bulls have started taking control or not, because we need to see a closed candle on a bigger time frame. All right, a 3 month bullish close would be amazing, because if we look at it in the past, normally after we had a bullish quarter on MSTR, then it leads to bigger movements. And the only reason why I'm just in on MSTR right now, because I wasn't big on it when it was trading like this, just because it was moving too fast and I didn't understand it at the time. But the only reason why I'm on MSTR right now is because the contracts are reasonably priced now. The price action is not really predictable, but it's not as volatile as what it used to be, and it's a better trade versus trading coin now. Coin is a different type of monster if you're trading those two. Could MSTR be a repeat from the past? You mean as the volatile spikes? I believe that it could, if that's what we're talking about, just because if his whole strategy is accumulating Bitcoin back in the 2000s, this big massive candle back here, it could. If, like I said, if the strategy is accumulation of Bitcoin and Bitcoin goes on a bull rally, I mean, this is, in actuality, it's a leveraged Bitcoin ETF. So the more Bitcoin it accumulates, the more the volatility that it probably could happen on the upside. So I think massive spikes could be going. And if you are a crypto bull, then leaps is a perfect opportunity for leaps. I marked out the accumulation zone between 104 and 78. So we're right there. Here's 104, 103, and then here's 72. So we're right there. So we're below the 200 on the daily, below the 200 on the weekly, below the 200. Yeah, taking away too much too quick. Trading above the 200 on the monthly, and we should be trading above all of those on a 3 month too. So, um, Continue to keep MSTR on the watch list simply because we don't know when crypto could start to turn around. Right now it's just for my direction, I just got all red arrows. So it's nothing big that we should really be have just looking for right now. But once I start seeing a few red arrows pointing up for structures, then I'll start looking at possibly starting to go heavy into some leaps. But right now, I wouldn't want to do it simply because theta. You can go long out, but in my opinion, you can still sit on something and hold it unless you're recycling the contracts, week to week or every other day on the profits. You can go long out and still sit within certain ranges. It'll be a nice accumulation play, but you don't want to be able to sit into it just too long to where you could be trading something else that week instead of waiting on crypto or MSTR to turn around. So we just have to get into it when the time is right, but I'm definitely not letting it out of my eye. You feel me? So um, the next thing that I want to look at, I posted it on after hours and I posted it in the chat. It was um, hymns. Bro, I just had like 30 tickers blast through my brain when I was trying to think of this the one ticker. All right, so this is what I drew out on hymns. And the I'm looking at the $40 strike price for July 17th. So it's already trading above a lot of indicators that's showing a healthy trend. So here we are on the monthly. Let's go all the way to the 3 month. Okay. So on hymns, I'm watching it. Of course, I got all green arrows down here, so that's a helpful indication. We're looking at taking out these highs right here. This is gonna be our target right now for hymns. Okay. I already had some that was mapped out. Let's see. Yeah, the 33 area that we're looking to break. And the reason why we want to break that is because we want to attack these highs right here. Right now, this is the target right now, 36.49. Reason because it's gonna show that bulls are starting to exceed the bearish pressure from the previous quarter. That's super dope once we start breaking out because we know, all right, they finna run shit. So once we can take out these highs, cool. We locked and loaded. We ready to go for a longer, moves to the upside. So I just marked out. Here's the breakout. Here we got we got the 75 the 75 MA moving across here, looking for a rejection. Okay. Once we can get a nice candle, either a break above here, a nice wick on the monthly, and the Bulls are still able to maintain control because we got 1 day left. We only got 1 day left in the month. They're not gonna lose. I hope they don't lose. You know, prices don't drop down to $26 and the Bulls lose all of this in 1 day. So right now, the Bulls are already gonna be in control in the month of June, going into July. So we're looking for a continuation. You feel me? Pharma has already been popping off. I called out mRNA on a breakout. Next day it pops. If you look at Johnson and Johnson, Trina was calling out Johnson and Johnson a month ago, and we pay attention to it. It's going crazy. I think it was pushing 146, 145, something like that. So it's only right that Hims, being a part of that sector, starts to get some of that same attention and love too. So now we're on the weekly chart, we're seeing a lot of good candles on the weekly. Nice big green candle this following week. Now, this week right here that we're coming off of, it was pretty neutral. the Bulls actually didn't win this current week, but guess what? They held support. We didn't break that previous week's lows. So it's still showing good movement. We're showing some moving averages starting to curl underneath it and starting to carry some of the momentum back up to the upside. And we're right there. Prices are literally right there at 36.49. They got as high as what? $36. So prices were literally right there and on the verge of breaking that previous quarter's highs. But I'm thinking that we could possibly see it this week. This is the daily chart with the moving averages actually starting to curl up, and we're getting a nice cross with the 20 crossing the 200 right here. And this just should signify prices starting to move up. So this is one of the ones that I'm having on my watch list pretty tight. I would love to see a bullish candle close above this 200 moving average just for confirmation, right? And then the thing is 36. I was looking at 40 simply because it's a lot of price action here. And I'm drawing it from these highs and lows over here. Okay. This 36.50, which was that previous 3 months highs that we need to break, that's kind of the midpoint between what a price action separates right here. All right. So 40 was, we can go 35s, but it's already pretty tight. We can go 40s just to give it some time to breathe and give us an actual discount in the contract prices. And going out to July gives it the opportunity for it actually to, you know, bake and get ready to make its move up. So um, we've been watching and looking at support here right above $30. We got the rise in moving averages here to catch it, which signifies the support. And also back here, you can see where it kind of gravitated within these price actions here. So unless it just doesn't flush and starts to break this upwards channel that we got going on right here, this is a pretty A+ setup because everything's just right now. We're trading above the moving averages on all the bigger time frames. We got a little bit of rejection. Was it on the weekly? Yeah, we got a little bit of rejection, which could be a pinch of price action in between here. But once we start closing above this, then we should continue to see prices actually move up towards this 41 area, which will give the 40s, the $40 contracts or the 40 strike prices, time to actually go in the money. So the contracts that I'm looking at are right here for July 17th. And if we take a look at the prices for the $40 calls, you can see that those prices actually been maintaining pretty good when they drop below $80. Bulls have been very heavy with snatching those up anytime it goes below $80. And the lows look like it's around 33. So the only reason a lot of volume probably haven't just flowed into these contracts yet is because they're still facing the selling pressure from the previous 3 months. Once we break those highs, we should see money start flowing into it because in my world, the algorithm kicks in and it starts, allowing more people to start snatching up these contracts, at cheaper prices, and then we'll see the movements up. Somebody was asking me about contracts and picking expiration dates and theta decay. If you still trying to decide how to pick your contracts, you want to look for attainable strike prices. You don't want to go too far out the money because if you go too far out the money, that's when the theta actually tears into and eats into majority of that money that you're swing trading with. So some days you might be up $50 and you swing it, and 2 days later it's still the price action is the same, but now you in the negatives. Is because the theta is killing you because it's not far enough out. It's not either far enough out, it's not close enough, or the consolidation is just killing you. So the perfect blend is enough time with an attainable strike price. And with the 40s being so high probability right now. Like I said, every time these contracts drop below $80, they get snatched up and they run from 80 all the way up to about $400 over the next week, maybe. So the turnaround on these are about a week. And I wouldn't really want to buy anything above it if I don't have to, simply because it comes to retest these levels pretty frequently because it probably high IV and the way that the prices take a while in order for them to actually hit. But 40s are good, even if you don't swing them for the whole July, all the way into July 17th. They could have a nice turnaround and a nice pop for about $150 or so. So from 80 to 250 is a nice chunk of change for swing trading, a $30 stop, and you still got time on it. So lock this one in. Hims is one of my ones that I'm watching. As long as it holds above, I think it was like that 26, 28 to $29 price range, and doesn't take out any lows, then we good. The confirmation that you need is these rising moving averages and this upwards trend right here. As long as both of these are intact, I mean, you looking at two confirmations right there that's letting you know that prices and bulls are steady driving this price up for right now. So highs are at what, 60, 68, 65. So it has a nice turnaround for shares, even so. So I think that's pretty dope too. Um, if there's any tickers that y'all want looked at, we can go ahead and break them down and dissect it too. And I'd be happy to dive into any of you guys' stocks that you're watching. All right, you said AbbVie, ArcG, and XBI. All right, let's look at ABBV, AbbVie. That's pharma too. All right, so it looks amazing. All right, it looks real good. I think it's a bit overextended. It's probably one of those tech stocks that's been running in order to give that actual index, movement. But I think that it'd be safer to make entries back below 236 right now. We could see some higher support, but this area right here, I mean, it's just uncharted right now. Yeah. So I definitely would look for a pullback, but because the tech sector is hot, if we look at Eli Lilly, I'm pretty sure is running out the gates too. One of my favorites, but I think right now, I think prices are a bit extreme for starter positions or calls. It can continue to move up, but I would look for a rug pull just because I don't think they're very well established in this range right now. So rejection should be between 254 and 257 right now. Yeah, puts probably would be the 235s. Okay, we might can watch that one. Those would be switched. So, all right. So right now, if I was to look at puts, the last little structure was between 245 and 243. So it's at 253 right now. You see that little area right there? That's the last place that it was at before it broke down. We came back and retested this, opened up and took off from there. So 245 puts would be what I would watch. Um, let's see how expensive these things is though. All right, so 245 put. This is July 17th. It's 580. Mm, That's at 390. And then this little short one, it's at 157. So we just have to see how it opens up tomorrow and see how it plays out. I think I would go with the July 17th though. All the money's already drained out of those. It's at 250. This is the 245. I said the two. Okay. So the 240s actually look safer. They at 250. The other one, the 245s was like I think 500. Most of the money's already drained out of here, which means that it'd be easier to get a better risk to reward from these. Yeah, the money's already been pretty much drained out of these. So once that drop or that pullback does happen, 575. So it's about a $300 turnaround that could happen if these prices, these contracts, start to come back in the money. They could pop real good. But the thing is, like I said, though, this whole sector is just popping off right now. So we don't really know how long that could take, which is why the contracts are just getting fried like that. But I would go 245 to 240 put strikes on Abby. Let's look at ARC-G, the genomic. These are kind of already popped off and a little expensive too to the upside. We'll just have to see how those move. They're having strong, strong rallies. Here's a rejection right here at the 75. But for the most part, it's pumping. It's got a nice way to go up to. It's been getting crushed quarter over quarter. So it's about time for this sector to actually move pretty nicely. And money might start flowing into it if it can't find anywhere else to flow into. It's an ETF, so I probably want to check to see what these probably see what the holdings is on this too. I like this one. It's cheap, it's affordable. I have to see what the volume on the contracts look like, but so far everything was pretty dope for a small account to grow. All right, so right now we're seeing a nice bullish price action on this. Um, let's see if I see any type of chart breakouts. I'll take some of this stuff off. Blow this up. So we got a nice little trend of support right there. And I mean, right now it's just trying to discover highs because it's been trading in a bowl for so long. I was like, man, this dude charting upside down. Yeah, I just see this shit different when it's upside down. All right, so here's our breakout along with the curling moving averages too. So I said we can watch and see how prices react when it comes to retest this trend up here. See how it reacts around 38, this $38 mark. But I wouldn't try to go long on it just yet. It's already kind of high. So honestly, on ArtG, I watch for prices. I wouldn't play calls or puts. I would just kind of let this one happen and then catch it for the move back up to the upside because I don't really see any gaps in the charts. Everything looks healthy. It's been undervalued for a minute. So I would just kind of give this a few days, let everything kind of let the dust settle a little bit. Okay, we do got a small little gap down here at 33, right up in there. So when it does cool down, this is what long-term investors probably try to get into. Of course, these lines, this resistance line won't really mean anything once it gets back in here, because then you start really looking for the sideways movement. But like I said, for right now, I wouldn't touch it. I just kind of let it simmer down and let it find its area and then revisit it from there. So just get that one some time to play out. And then XBI, biotech. That's pretty much the same one. All of the ones that well, the last two that you called out, those are pretty much already in the running. I wasn't trying to time the upside or the downside just because it is in the uptrend and a pullback's expected. I would watch for any type of price action to support to hold up here between like 147 and 145. It's been extended nice 1, 2, 3, 4, 5 green days in a row, 3 green weeks in a row, and it doesn't slow down, but it's been moving pretty extreme. So like I said, the only thing you can do is kind of wait till these find support and then jump in from there. Expect a downtrend. You can't really expect a downtrend when it's trading like this. It's too strong. It's been probably well no, this one hasn't even been beat up long. But the thing is, I guess that its holdings is looking to retest these highs. It's wanting to get up to like 175, which is why I've been trading so fast. After going for a what from 22 to 25, that's like a 3 year accumulation span. So everything that's been buying up has been sitting on their hands for years, and now it's finally taking off. So pullback will come. You'll definitely see it, but how long will it last? That's the question. And as of so far, looking at it from like a monthly chart time frame, it hasn't slowed down much. The best that we get is a flat month, but every single month buyers are stepping in. So if you're expecting a pullback, you can play it day to day, take profits when it come. It's just not any signs of any long term pullbacks holding. We might get a consolidation like we see here, or a bigger frame consolidation like we see here. But for the most part, you just don't stay in them too long. All right. AMD. AMD is kind of following the NASDAQ, of course. We got some sideways movement. We did end up breaking previous days lows, but bull stepped back in. We were able to close, almost flat. We had a bearish week, and we actually had a bullish engulfing candle also. If you're new to those, that's when prices actually open up high. It wicks up and it finds an exhaustion point above the previous week's candles highs, and it flushes back down below opening price, drops low enough to take out the previous month's lows, and then prices come to kind of make a not an indecision candle, but it's just showing you that it's gonna be some consolidation and possibly more of a downtrend. But the thing is with AMD, it doesn't last long because we've seen the same thing over here to where they actually got bought back up within a week and then they made new highs. So we retested those highs. Now we got some indecision. We got a bearish engulfing. This is what we watch for, is consolidation in between previous weeks highs and lows with a possible rejection and further move down if it doesn't hold. All right, so what we could see, let's see, we just broke down, that was that. The monthly chart shows that, I mean, they're well in control. This is just a sideways movement consolidation period. I mean, AMD has been pumping. All right. Massive, massive year so far. Um, we'll be trading between these two highs and lows and looking for any type of break between the two. If it doesn't break, then that means that we'll probably just see a ping pong in the middle. But for the most part, it's going into a bearish week. Expect some selling pressure and a break below 507.71. I got 3 green candles, so that's cool. The 2 was a bearish week and a bearish day, which we did see the impact of that. So, like I said, for right now, I would expect more consolidation. We're starting to squeeze between here on the 20 and the 50. Would I buy more if it holds? I would only buy more if we have a major time frame close. Like my indication to buy more would either be a strong monthly or a strong quarter. And I would look to buy above like that previous candle's closing price. Because, you know, your open and your closing prices or candles are like agreed prices. Those are established prices to where, you know, these institutions say, all right, we're gonna start the prices here, and this is what we want them at. So, you know, that gives you some direction. But right now, as far as buying more, while the NASDAQ is still, you know, having a pullback, that's being the tech sector. If we look at SMH, which we can check that out too, which is the index for tracking semiconductors, if that's having a poor month, then we can expect the holdings to have a poor month too as a whole. I mean, I think the only thing that's really been moving is SanDisk and AMAT as far as like chips, but everything else been sideways, including Nvidia. So going long on stock that's already been running pretty heavy, that's a decision that you have to make depending on your how heavy you fuck with the company. So if you're an investor, you can do something just DCA like $50 a week on a red week. You know, you don't have to buy the whole share, just $50 at a time, $25 at a time when it closes red. Cause at least you know you getting it on a discounted, you know, plate. If you put in a couple of dollars when it's red this week, you see the dip, you made some money on the way back up with shares. If you going and you have a red month, which I don't think we've been seeing those a lot, but if you have a red month, the last day of the red month, go ahead and deposit like $100 worth of shares. And remember, people, you don't have to buy the whole share fraction of shares of the thing. You just, it's better to buy on the last day of a month rather than try to buy it in the middle of the month. But for the most part, like I said, AMD we closed on a red week. We'll be looking for a retest of lows here at 507.70. If we break those, then we can see prices drop down back down to the mid 460s. Okay, because we seen the price action jump there. If we break the lows, we can see prices roll back down in there. You got 135 shares. Oh shit, that's dope. Bought back in 14, so you got for a steal. You'll have more than that whenever they start to do a stock split. People thought AMD was a joke at first, and then once it decoupled from Nvidia price action for a reason. So I watched the ping pong this week for AMD. If it breaks the low, we'll see prices drop down toward the mid 460s. Let's see what the contracts look like. For let's look at 465. Even those are expensive as hell. They was holding up around 630. 465. So these probably would pay nice if you can get them close to $100. They would have to play out extremely quick, but even if you don't get the full, thing from $100 back up to at least 630, that's a nice turnaround if you time these right. Like I said, these will be a high chance that these will play out 465 put simply because we're already fighting bearish selling pressure, man, bearish selling pressure from the previous week. So with that being said, if we do break those lows and the momentum, start shifting, then these will start moving even quicker and they accelerate a whole lot faster. So AMD would probably be my puts will probably be my direction for this week unless something different happens and we break those previous week's highs. And like I said, that'll give us the next move up, and that's above 560. And we'll shoot towards like this 575 to 590 area. So, but check out this gap though that we got on the daily. That come from our earnings. So, at some point, it could be after the split, it could be before, but at some point, something's gonna trigger it to start selling some type of bad catalyst, shift the direction, and whenever the narrative change that drives the stock, the stock prices reflect over time. So, it still looks good as long as everything's praising it. But once a catalyst comes out that shifts it, some type of supply demand or something like that, that's when we start seeing prices start dragging down until it starts aiming back down here because investors need to get the prices in here cheap. So careful on that one. Look for bearish pressure until the highs, but 560. We looking at, if I'm gonna mess with it, I'll do probably the short weeklies. AMD 465 puts, and I'll look for them around like below 120. Has the best risk to reward. Um, Adobe 217 calls. I looked at Adobe. I glanced at it, but I wasn't really sure if I wanted to touch it or not. Um, yeah, right now. Oh, okay. You got to be careful on trades like this. It just got flushed because of an earnings call, which isn't unnatural for Adobe. Adobe been getting flushed on earning calls for a minute now. So as you can see, after the earnings gap down, you see a slight bit of volatility. It eventually rejects and drives back down as it goes into the next earnings. So with all that being said, buying calls on Adobe is very, very risky simply because the price action isn't going any higher. A lot of the structures are pointing downwards. So the calls go, one day, but then eventually they'll lose value super quickly because the prices are just that volatile in the down to the downside. So if you're looking at, you say 217 and 230s, when you do calls also, bro, try to go with the increments of 5, simply because the open interest and the volume tends to gravitate better when you do them in increments of 5 instead of like the 217. Do like 215 or 220. Is for some reason, like on those numbers like 217 or so, the spreads would be awfully wide, the volume would be low, the open interest might be a bit high, but it normally, those odd number calls for some odd reason, 217 and a half, they tend to give you problems on entries and exits. But if you're doing 217, the price is at 202. Let's just do 215 to see where it says. So right now it says 64 cents, which I mean, you said 7-7, so I'm looking at the wrong expiration date. 7-7. Let's look at 220s. Okay, that ain't got much action. 215s. What was the other one? 7-7. 220s. Okay. So these are the 220s. We rather, just because of how choppy it is, you rather go closer. I know you put 230s too, but these are reasonably priced right now at 230. This is where it closed at. So most of the money's dried out of there, but as long as it chops, the theta can kick it in. The reason why I say 220, if it's at let me watch this real quick so I can come right back to it. Which one? This one. All right, cool. All right, so let's go back to the chart real quick. All right, so after the earnings right now, we looking at chopping in between here and then there. That's our chop block right now. We are already going against bearish selling pressure here at the weeklies, and that top and the bottom I marked out, that looks like it's the weekly high and lows. So this is our chopping zone right here as of this week. So when we go back, you really wouldn't even want to do 220. You probably would want to do 210s, honestly. And that's just to keep the theta off your ass. So we're seeing a lot of floor action here around 190. And like I said, you will want to do 210 calls. If it's too much, that means don't mess with it. I always say, man, if you feel like you don't want to spend that much to be right, then just don't touch it at all. Cause out the money sometimes it gets you chewed up quick. So let's actually look at the July 17th and look at 210 calls. All right, so the 210 calls, which those right now at the moment has the highest possibility of going in the money, with previous week's highs being at 212. So you're looking at prices to eventually retest like this 196, 670, and then you'll really look for discounts at like 268 on those contracts. So if you were to play those, that's how I would do it. I would look for these July 17th 210 calls. We see how Adobe opens up tomorrow. I mean, it's probably going to be a bit choppy, so you will be able to see these contracts around 268 or 270 or so. The spreads might be wild because, the stock price action may still be kind of shook. But for the most part, you probably want to take a limit order depending on how the spreads are at like 270, 270, 265. And that way you'll get the bounce on the price action and the premium on its way back up towards like the 670. So if it does tend to go in the money, that's when you'll see this premium really start adding up for Adobe. But for right now, I wouldn't go any higher than that 210 because I'll be looking for it to at least retest these highs. And they had a nice green week last week. So that's the thing. We're actually seeing a continuation. You actually wouldn't want to see it break these lows, but we can, just to simplify it, the support's at 190 and we're aiming for 212. Those contracts look good anywhere around what we said, 165, 170, 210s. I said no, 265. 265, 270 is where those contracts actually look, you know, the best, below 300. So, but overall, like I said, the market is kind of different right now. We've been seeing prices kind of chop. Um, you can see on this 4 hour chart, we got the moving average starting to squeeze. So definitely expect some type of move going into tomorrow on the open. If I hide some of these drawings, there we go. If I had to make an assumption right now, all right. So as of right now, we're rejecting around that 200 moving average. So puts are still a play right now going into tomorrow with some support. Might make lower lows, but we got support right here around 73.65. We just have to see how that play out. Unless we can break these highs, and then we'll have a continuation up going into tomorrow, and we can go and retest the support up here. But right now, we're looking a little bearish on both ends, SPY and NQ. So definitely just stay on your toes going into tomorrow. Get a market a little time to rush. I normally treat Mondays like Fridays because it's the deciding factor. You really want to pay attention to the opening price to see what prices hold, throughout the day, and that kind of gives you the sentiment at which way it's going to drive throughout the week, and that way you just don't rush to conclusion, and it's you give your time an opportunity to get in at a decent rate. You still got, well, shit, this week is a short week, so we really only got Tuesday, Wednesday, and Thursday, but I mean, that's plenty of time. So we could be a chopped market for the most part this week with the short week before the money floods in. And then, like I said, we start a new quarter in July. So investors could be holding, um, they could be holding out just to load up going into the next quarter. Checking out Meta on Meta right now, still a lot of bearish price action. And we are chopping in between 550 and looks like 535. So going into the weekly, we're still making weekly lows. We're trading below a lot of the moving averages on the weekly. We're still trying to find some of them on the monthly chart and the 3 month. We haven't even found the 20 yet. So don't take too much of your time on meta calls, and then actually taking the puts require time because it likes to stall out a bit. But as of right now, um, Meta's still facing a lot of selling pressure. Nothing on it saying go long or go short, just because the moves happen so quickly. It looks like we have a little downtrend that we can draw out. Uh, got a small downtrend. Which one? This is the weekly. So yeah, you want to watch out for that. Prices are starting to squeeze. We're filling that little gap here between 546 and 535. Like I said, as of right now, if we respect this trend, we got more upside potential than downside unless we just break below here or gap down and want to start flushing down to 461. But as of right now, we're looking at probably more upside. So possibly fill this gap right here, round it out, and then on a recovery day or a green day for the market, we still rally back up. to start retesting price action like right here and then back up here. So like 560 to 580. We'll start seeing some price coming back to retest those levels. So careful on the downside. It can come quick, but the upside can be a ripper and a nice squeeze move back up into resistance. All right. 560 calls would be what I would watch. Um, the sixth, the second. These really ain't even don't even have money left in them. And then these are just Meta's gonna always be expensive, but on these 560 calls, I mean money's gonna be flooding in already. It's pretty much below um it's pretty much below discounted levels already. So if you're looking at Meta, I would be looking for the upside on that one. All right. So appreciate y'all, man. Coming, give me a little bit of your time. Soak in something. And hopefully, we made some sense of some stuff tonight and pointed you guys in the correct direction. Going into tomorrow, y'all can definitely expect me to post some more levels tomorrow morning on any plays that I'm watching for the day. And if I just don't see anything, and we stay in this chop, we just gonna sit on our hands over here and just wait on something clean. We had a nice play on Google. The contracts went 182% on which calls was it that we took? Uh, I'm going to check now. We had a 345 calls. They went crazy. And then we had the Microsoft, which we got off. We got out of early, but then Microsoft popped off and went from like, I think it went 189% on those. So we had a good day Friday. And we're gonna try to keep it moving on into this upcoming week. So if you tapped in with your boy, hey, we're gonna continue to print. I'm turning the print on. Mark my words. So it was dope hanging out with y'all like always, bro. Y'all have a good night. If you have any questions, hit me up in the DM. I'm gonna post a video a little bit later up tonight. If y'all have the opportunity or the time, go drop a like. Just show me that y'all appreciate the time that I'm giving out to y'all. That'll help a ton. So y'all have a good night, man. Get some rest, some clarity,